Okay, welcome back again, guys. This is another episode from your favorite channel, and today we are going to be talking about trend lines. Trend lines are one of the most sought after strategies, especially for price action traders. And I will not disappoint you in this video. I will take you through everything you need to know for you to become a complete trend line trader. So stay tuned. Let's start from the beginning. What is a trend line? So the definition, or at least our summed up definition, is a trend line is a moving support and resistance. I hope you catch that. A trend line is a moving support and resistance. You understand it better as we continue with our tutorial. So it shows support and resistance zones in a trending market, right? So the most important thing about trend lines is they only work in a trending market. It can be bullish, it can be bearish, but it has to be trending. So here I have an example of a trend line. I have an example of a trend line. And as you can see here, you can see that the market is showing positive market direction, right? And then as you can see on these supports, if we try to connect these various support zones, you realize that we can connect them with this line because they are creating what we call a trend on their way up. They go up, they come down a little bit, go up, come down a little bit, and they continue like that, creating a trend. So that is where the trend line concept comes from. So let us go to the market and see how we can draw our trend lines. Okay, we are here in the market. So this is how we draw our trend lines. Let me remove this and this. Okay, so basically when drawing our trend lines, this is what we do. We just grab this line here and then we draw it from here all the way up there. That is what a trend line looks like. Just simple as that. So what you will do is you are just connecting your troughs. I like to call them troughs, or your zones. When the market, like when it goes up, when it comes down and it's supported by this zone, right? And it goes up and it comes down. You just connect these points, right? That is what we call a trend line. So you only draw a trend line using major support and resistance zones, whether your market is bullish or bearish. Let me give you another example in a bearish market so that you see what I'm talking about. Okay, this is another example of a market that is bearish. As you can see here, right, I am picking my major support, my major resistance zones. This is a major resistance, and this is a major resistance that has forced price to continue to go down. So you don't just pick any zone, right? You could have said, let's say, you could have said this is your trend line. I'm just giving an example. This is your trend line, right? Here, right? And you pick this here, and then you make it, you draw it like this, right? You could have said your trend has finished. Why? Because you picked the areas that are not more significant that much. So now you realize that your trend line is easily broken. But now when you pick the major zones, you have a higher chance of having a higher probability trend line that will always be respected, right? We'll come down to this major to these small time frame trend lines. But as for now, as you can see, I'm only using high time frames for my trend line. H4 D1 in 1 week, but I usually want you to dance around H4 and D1. There you get a better and within range kind of a trend line, because you don't want to focus on too much data when you're drawing your trend line. So those are some of the points that you need to note when you're drawing a trend line. Focus on the major support and resistance zones. And another thing, make sure your market is trending, right? Make sure your market is trending. When you are showing your market direction, it has to show the higher highs and the higher lows. You don't just connect any points. Let me give you an example. Let me give you an example like this, right? I will come here and say, I can try to connect this point, and nah, let me use this one, this one, and this one, right? And then I can come to you and say this is a trend line. But my friend, the thing is, this is not a trending market, really, because your market seems to be going up, right? It's in a bullish market, and your trend shows us that, so you don't just draw a trend line for the sake of drawing, because as you can see here, the market was sort of ranging here, right? It was ranging. As you can see here, this part of the point, the market was still bearish on this end of the market. The market was still bearish. All right. So you realize that if you connect a trend line with points from areas when it was bearish and now it's bullish, it invalidates the quality of that trend line. Because what a trend line is supposed to do is show you the direction of the trend in connection with support and resistance of that trend. So that is one of the common mistakes that people make when drawing a trend line. Also, one main important thing, you do not cut through bodies. What do I mean by you do not cut through bodies? When you are drawing a trend line, right? Let's say this price was respected and you are seeing your control shift candles there. You cannot draw it like this, and you are cutting through bodies and you are forcing price to respect you. That is not how you draw a proper trend line. I can appreciate if you cut through tails sometimes. I can understand. But bodies, no. There is a do not do. Do not cut through bodies when you are drawing a trend line. I can appreciate if you, let's say for this, I drew it like, how was it drawn initially? Like that, right? It is very clean. It is very stable. You can see that my price was touching the end of the candles, and it just moved. It was respected like that. So that is how you draw a trend line. And I also want you guys to take note of the fact that you can see that my market has been trending, right? It's going down in a nice bearish market. So that is one of those things. And one major thing, why when we say a trend line is a continuous support and resistance, or a trending, as you can see that, yes, there is a trend line. But the reason why that is being respected is because we have a resistance here, right? The reason why this price was respected is we have a resistance here, right? So when we're dealing with trend lines, we are not moving away from support and resistance. We are just within that conversation of support and resistance. That is how simple it is with your trend lines. They work in conjunction with trend lines. That also brings me to the point whereby a combination of a support zone or a resistance zone is a combination of a support zone and resistance zone with your trend line gives you a higher probability setup. And which brings me to the point that we only consider trend lines when they are in combination with support and resistance zone. Why am I doing that? Because when you are trading, right, you need at least 3 confirmations for you to consider your trade a valid trade. Let's say, for example, if you remember when we were dealing with support and resistance, right, we said you need to have market direction on your side, right? You need to have support and resistance on your side. You need to have control shift candles on your side. Then you know that you can execute, and you need to have lower time frame change of structure. If you remember what we talked about, for you to take a support and resistance entry, you need to have all these factors in your side. So when you are trading trend lines, one of the common mistakes that people make is that they just consume any trend line point. But that is quite fatal, because when you just consume any trend line, every time your trend line is touched, you consider every time, you realize that a line does not push price. That is something that traders need to understand in the industry. This line does not push price. Right? What it does is it shows you points of interest, right? And when you're working with your trend line in combination with support and resistance zones, you realize that you have a higher probability a higher probability chance of your trend line getting respected. Let's also talk about what do I use when drawing my trend line. You hear some traders say you consider the body, you don't consider the tail. So they draw their trend lines something like this, right? Others will say we consider the tail and not the body. Guys, that is just the nitties and gritties. It doesn't really matter whether you're taking the body, whether you're taking the tail. The truth is, support and resistance is not a price. It's a zone, right? Whether you take the body or I take the tail. Right. I want you to notice something. Yeah. Some traders may argue with this, but trend line is a zone. Do you see that? If I had touched the body and if I had touched the tail, it could have been respected still, because my major confluence that I want to see is that being in combination of a trend line at a support or a resistance zone. In this case, it was a resistance zone. So it gives you room for entries within your trend line, right? So let's check on okay, so let's just to put it in perspective, these are the things that you need to do when you want to draw trend lines. The keyword is the trend. That's obvious. Your market is supposed to show clear market direction, like I told you. And then when you have an established market direction, draw your trend lines picking only the major support and resistance zones, like I showed you. So this is how you draw your trend lines. You draw your lines on a higher time frame, right? And do not cut through bodies, like I told you. Make sure your trend line touches at least 2 points, and you consider the third point as for you as confirmation to say this trend line is being respected. So yeah, that is the points that we need you to note on trend lines. So let's go to the market and see if we have any more ways we could have applied the trend line method. So here we go. We have another trend line here, right? This point, and that point, right? We have another here, right? We have this point, and that point. So now let's talk about catching an entry, right? Now you just know how to draw a trend line. Let's talk about catching an entry using a trend line. This is how you do it, right, guys? When your market gets to your trend line, like, because you say this is the first point, this is the second point, we now consider it a valid, a respectable trend line when it gets to the third point. You know that point, fool me once, shame on me, fool me two times. The third time is a valid. So yeah, this is how you do it. When your market touches your trend, right, you want to see if there is a support or a resistance on that. So that we said we want to see 3 confirmations. The first is your trend line. The second should be your support or resistance. The third one should be your control shift candles. You want to see on higher time frames control shift candles being created for you to consider your trend line a very, very valid trend line. But here's another point that I need you to consider, because we need to be rock solid. We need to have enough confirmations to consider a zone a valid one. So you go on M15, right? This is our M15. Let me remove this. That is USDCHF. You go on M15 and what do you do when you get to M15? Right, if you remember, well, this was our zone. So when you go to M15, I need you to check that after those control shift candles, you notice that time the market was going up, right? And it started doing this. I need you to, okay. Right, if you can see that the market was going up here until it got here, right? I need you to see that at this point, what happened? The market took out the previous low, right? And then it failed to take out the previous high, but as it failed, it created control shift candles. So what do? You make your entries here, you put your stop loss slightly above there, and what do you get? The market just melts down like that. So the conversation of market structure shift still comes back. As you can see here, I'll say it back, I'll say it again. The market took out the previous low. This was the previous low, right? And then we consider this market structure shift. And then when it goes back to this price, right? You see that the market fails to take out the previous high. It almost did, but it failed. So when you see control shift candles, you take that end, and the market just rolls with you. That your stop loss will be way above there. I would put it slightly above, not exactly where the candle ends. I would put it slightly above, and then my entries would be there. How would you have used this candle? I would have used this candle here. It gives me a good control shift candle. I would have used this one, taken that entry, and price would have just melted like that. So you will see that it's not always where you will see clear market structure shift on M15. Usually I would want you to work with control shift candles, support and resistance zone, and your trend line. But if you see a market structure shift on M15, that is a combination of the market will be telling you that the lower time frames are in agreement with the higher time frames that the market is respecting this zone. So guys, that is all I had on on trend lines. I hope that was clear, that was straightforward, and I hope if you used to use or if you use trend lines, you got something from this video. And continue to like, share, subscribe, because more is coming your way. Thank you guys.